Oh, good afternoon and welcome to the market close. This week, holy banana bread, it came up and it didn't show the camera. I'm like, what's going on? But it popped in here just a second later. Anyway, let's start that all over again. Welcome to this week, and boy, what a week it has been. It is always fantastic to be here on the weekend. I will warn you guys ahead of time. I'm coming down with a mild, maybe a cold, maybe a flu. It'd be kind of funny if it was a flu because I got a flu shot on Tuesday. So yeah, it's okay. So I may have to mute if I have if I have to do a cough or something. But we're gonna trudge through this. We are gonna trudge through this now. One thing you may be noticing right away is, holy banana bread, why is it, why are we so zoomed out? Let's zoom back in a little bit here. Here we go. But actually, if I zoom out, you'll notice the bookshelf is gone. The bookshelf is now gone. I am going to get some more for over there. I'm going to get some more tiles, and we'll put those in. And it's all going to look fantastic when all is said and done. All right, let's bring me back in a little bit here. There we go. There we go. Perfect. All right. Oh boy, what a start! What a start. Yeah, it's another great day. It's a little chilly here. Apparently it's 8 degrees, but that might be that oncoming cold or whatever. That's making me feel a little bit chilly, but that's fine. We're all good. Let's start. Let's start right away. Let's hit the chat immediately. Let's see what we got going on here. We got Jonathan Montgomery. Not late this time. Nope. Always appreciative. Always appreciative. It's actually funny. Every so often when I'm in my personal Facebook, I will look at friend recommendations. And the other day, Jonathan was there. I was like, oh, look at that. There's Jonathan. Okay. I didn't do anything. I because, that's like, I don't know, that could be creepy. I don't know, but I thought that was funny. GID says, hello there. Does National Bank Direct Brokerage have paper trading? Yes and no. The answer is no, because they don't normally hold it. But they do have events and little contests where they basically have trading contests from time to time, and they will allow you to do paper trading for those contests. But no, basically not. I know Quest Trade has paper trading. I also believe TD has paper trading. So there may be some more out there as well. Definitely, guys, let GID know in the chat if you know of any other places that have paper trading. Bismarcky is in the house with a happy Sunday, everyone. We got Mary in the house. So, guys, that means it's time to hit the like button. So, what do we got in here right now? Oh, it's not telling me. It's not telling me. Holy banana bread. I can't believe it. Nope, it's not telling me how many people are here. But nonetheless, we got 11 likes. Let's see if we can get to 13. We'll start you guys off easy. And while you guys are hitting that 13, we just got to 12. I'm going to have a sip of coffee. Oh, that's so good. Oh, look at that. We double jumped. We went from 12 to 14. You guys rock. It's like Super Mario Brother and you just hit the charge up mushroom or something. That was awesome. All right. Vic says, some of the Canadian blue chips dipped Friday like banks. Is more red ahead? Well, there's always going to be red ahead. How quickly are we going to get a recovery? Should we get a recovery this week? I think so. I think as we move into December, we're gonna see things steady out a little bit. Like, I'm still expecting a green month for November, and I'm thinking a green month in December as well. Then we'll have to sort of see. Now, there's a lot of stuff going on in the markets. There's a lot of moving parts. People are, right now there's a little bit of worry about what's going to happen with the rate cuts, especially on the Fed side. On the U.S. side, People are worried because inflation looks like it's reared its head up a little bit. So people are a little concerned with, oh my gosh, does this mean we're not getting a rate cut in December? But we'll talk about that. We got that in the news. That's going to be fine. All right. Vic says, on the road again, but we'll pull over and join midstream. Wow, I really enjoyed the Jake Paul Tyson pillow fight with pillows wrapped in their fists instead of boxing gloves. Yeah, I mean, I didn't watch it. Boxing's not really my thing, but I did hear that another issue, and maybe this is on Netflix, is that Netflix was having a little bit of trouble with the broadcast. Maybe they had a lot more people watching than they could handle. So Netflix, if you're going to have a big event like this, make sure your ducks are in a row before it starts. Now, any of you who did watch the boxing match, did you have issues? Did Netflix cause you some pain during the event? Let me know. Let me know in the chat. I'm very curious about that. We got Jordan in the house. Well, good afternoon, Candace, and all of chat family. Hope all are well. Yes, absolutely. Always good to see you, Jordan. Always, always good. And another person that's always good to see is King a Day. Hello, everyone. Happy Sunday. And we got Jay in the house with a hi, everyone. And we go from 1J to J squared. So JJ is in the house with a hello. 45 minutes. Okay. We'll be back and listening in the background. There we go. Prairie is in the house with a good afternoon, community, and happy Sunday. And look at this. We got Lisa in the house. We got Bismarcky. It's not November 10th. Banana bread. That's hilarious. That is hilarious. All right, give me a second. Let me fix that. You're right. It is the 17th. There we go. All right, that should update. Bang. I can't believe it. After last week, it was very embarrassing, and I did it again. Ben is in the house. Hi, everyone. Hello, Ben. It's good to see you. Paul's in the house with a hi. All right. Let's see. King a Day says, did you watch the fight on Friday? I think it was a waste of time. And what are your thoughts about the possible Netflix stock being impacted on Monday due to the bad network performance? Yeah, I think it's a really good possibility that Netflix may not have a good open on Monday. We'll be able to see that, of course, in the market open. The market open. In the pre-open, you'll be able to. I think they'll start falling right away. I do think this will certainly hurt them a little bit. They'll bounce back. People forget pretty fast. But I think at least on Monday there will be some people very, very annoyed. Jordan says, so this mail strike has my glass business at a standstill. Oh dear. Let's see. I have a business account with Canada Post that gives me discounts on every shipment. Now it's useless. My customers and I are well pissed. Yeah. Oh, Jordan, this sucks. And here's the bad news about this strike. I don't think there's not as much pressure as there normally is to get it resolved, because back in the day, everybody relied on Canada Post a lot more than we do now. There's still people that it's their lifeblood, like you, Jordan, for example. But there's just not as much pressure because a lot of people, they get all their deliveries through Amazon and everybody else, and everything is direct deposit. So, yeah, there's not as much pressure. There's not as much pressure on them. So, other than the fact that Canada Post themselves, they're losing a lot of money because, this is their big time of the year, the holiday season. So, and we're going to talk about that, of course, because obviously it is in the news. All right. Paul says, opened up YouTube on the TV and the timing was the countdown. Nice. Yeah. And for those who don't know, the only reason I do that countdown is some people get an ad or a couple of ads at the beginning. So the countdown basically, for them who get the ads, they'll see the ads and they might come in at the very end of the countdown and they kind of miss the countdown. But yeah, it's for those who are are watching those ads at the beginning. So that's what that's all about. Mario is in the house with a good afternoon. RCB is saying 30. Sure. Oh, 30 what? Okay, now I'm not sure what the 30 is. Or maybe it's like, yeah, we need 30 likes. That's what RCB is saying. Guys, don't disappoint. Don't disappoint. Get us up to 30. Why not? Let's be aggressive. Let's just push it. Mario was number 12. Oh, that's what the 30 is. 30 watching. Okay. We just started. Let's double that number. Let's get 60 people in here before before we go too much further. Michael wants to know, how cheap is Pfizer going to get? That's a good question. There's a lot of uncertainty with health in the U.S. That's going to impact them. So we'll have to sort of see where they're going to stabilize out at. Right now, I don't have an answer for you. I don't know how low they're going to go. But we'll keep our eye on them for sure. I don't think they're finished. I don't think they're finished yet. I don't think they've bottomed. So the bottom's not in. That's the best answer I can give you on that one. Jordan says, we had a few issues, a few stream drops during the fights. Okay. Interesting. Now, were you live streaming, Jordan, over there on Friggin during the fight? Is that kind of where you had some issues? Or were you having issues just with Netflix per se? All right. Paul says, watched Spiral CPA on YouTube, and they were reviewing one of the RBC balance funds with a 2.1% MER and showed all the crappy bonds and the weird accounting of the fund's balance sheet. Ooh, yeah. The problem is, and I'm not going to say this with every bank's ETFs or things along that lines, but when you look at some of the funds for, whether it be RBC, Scotiabank, a lot of times when they have an ETF or some sort that they're pushing to you, or even mutual funds, you're going to find a lot of their own stuff in it. And they're kind of, in a way, some of them will even deny you access to some of the better ETFs out there because they have their own version of it, which may not be as good. Probably, I would guess, I think out of all of the banks, when it comes to their own funds, I would say BMO probably, in my opinion, this is just a straight up opinion, I think the BMO ones are probably the least problematic, for sure. Let's see. Jonathan says, well, the month was correct. Oh, there we go. Paul says, cancel Canada Post along with big cutbacks at CBC. Yeah, it's kind of funny. Like, honestly, I don't think I really watch a lot of CBC anymore. Probably just a few of their news things that pop up, and those I watch on YouTube. So yeah, it's kind of interesting. Maybe CBC, I'm just putting this out there. Maybe what they need to do is go away from being a straight up network. So maybe what CBC could do, for example, is they could have their YouTube presence, and then they have their online streaming gem thing. Between the two of them, I think that's probably enough for them. But, I'm just saying. It's just that I don't watch it. There's probably people that love their CBC still. But I'm not one of them. Bismarcky says, I don't think we need Canada Post delivery 5 days a week. You've hit it right there on the nail, the head on the nail. Yeah, I don't think we need 5 days a week. I would say maybe 2 days a week, maybe two. Now, but keep in mind though, let's just turn this around. Let's not think inside the box. Let's think a little bit outside the box. So there are areas that need, that rely on the mail a lot more. So for example, rural areas, areas up north, remote areas, maybe let them have their 5 days a week. But in a lot of the big cities, let's cut it back to maybe a couple of days a week. They could still do all of their delivery because that's where a lot of the money is right now. So yeah, definitely. I would, and I know that the union's not happy about this, but I would say, yeah, go to 7 day a week delivery of parcels, things like that, so that you could compete with all of the couriers. Then actual mail delivery, yeah, knock that down to 2 days a week in urban. Then maybe keep your 5 days, or maybe even just go to 4 up in the more remote territories and the remote places where people kind of still rely on it. But that would be my idea. All right. Ben says, which one do you prefer, BAM or Ben? So Brookfield Asset Management or Brookfield Corporation? I love BAM. I love them a lot. But I gotta say, Brookfield Corporation is absolutely kicking butt. And I know that there are, I think Daniel Pronk did a video where he sold all of his BAM and he moved a lot of it over to Brookfield Corporation. I don't think that's necessarily a bad move. I do love them both, to be honest. I was hoping, what right now we currently have a vote going on for the deep dive. I think XEQT right now was winning, but I'm like, I almost didn't add them because I did a deep dive on them not that long ago, and I don't think a lot has changed. I believe it might have been last February that I did the deep dive. So one company I haven't really done is actually Brookfield Corporation, so BN. So I was hoping they would win. I think they're in second place now. So with that being said, guys, if you're a big Brookfield Corporation fan, you gotta hit that community tab and you gotta vote. Otherwise, they're gonna lose, and we're gonna get XEQT again. I mean, I love XEQT, but I really want to do Brookfield Corporation. But you guys, and here's the thing, though. Let me just put this out there. Just because I said that's the one I want to do, don't let that change your mind. If you really do want XEQT, go vote for XEQT. This is your guys' vote. It's not mine. If it was a situation where it's like I get to choose, why would we even be voting? So yeah, whatever you guys want. But if you are a fan of Brookfield Corporation, now is your time. Now is your time. All right. Jordan says, no, we were having issues with Netflix itself dropping stream. Okay. Yeah, I was trying to think if no, I think most of what we were watching on Friday night was probably YouTube and maybe a little bit of Paramount Plus. But yeah, no Netflix. Prairie says, let's see. Yeah, I generally only receive mail 2 to 3 times a week anyway. GID says, luckily I boycotted Canada Post and UPS a long time ago due to them breaking my stuff. Oh, yeah. Just Amazon and Pure Later for me these days. Yeah. Yeah, I'm okay with, like, I don't think I've ever really, I've had a couple things broken with Amazon, like, but usually it's usually because somebody at Amazon packed it wrong. Like, you don't put, like a thing of cat treats in a flimsy plastic container in with a great big giant container of cat litter, because all it takes is shifting around and you're going to get some cracks in the cover on the treats. It's simple. It's simple. Don't put things together like that. Use your head, Amazon. Let's make sure that this gets done right. All right, and we have good vibes with a bonjour. Bonjour, ça va? There we go. Love it. Vinit says, hi Candace, move the bookshelf. Background looking good. I'm glad you don't watch CNBC. we were talking about CBC. But I don't have CNBC either. Like, I don't actually have television, right? All I have is streaming services that run through the TV downstairs. Between that and YouTube, that's my entertainment right there. All right. Oh, gosh, I've already caught up. This is great. We can actually hit the Canada Post story. But I got one last. I still have Prairie here. Let's see. And I could do without the flyers that Canada Post delivers. Oh, my gosh. I'll tell you a funny story before we get into the Canada Post thing. Back in the day, back in the day, I was getting them AOL CDs in the Canada Post. Like almost every week, I was getting one of these CDs. So I started just collecting them. And if you turn them upside down so that the label side is down, you got that nice mirror. So I had this one little wall in my room at that time, and I turned the wall into a mirror made up of all of these CDs just all tacked up. It actually looked really cool. But yeah, anyway, that was kind of a fun little thing. All right, we got Michael in the house from Montreal saying hello from Montreal. Hey there, Michael. How are you doing? You're actually not that far from me. I'm over in Ottawa, so it's a few hours away, so not that far. All right, guys. Let's talk about Canada Post. There we go. What can I say? Oh boy, we definitely saw this one coming. So those Canada Post workers, of course, they hit the picket lines on a Friday. They did, of course, give their 72-hour notice before they did that. It's actually funny. After they gave their notice, Canada Post actually said, "Oh, well, maybe we'll lock you out," but they actually said afterwards, "No, we weren't actually going to lock them out." But so right now we're talking about 55,000 postal workers are on the picket line. So the Canadian Union of Postal Workers are basically saying there's a whole bunch of unresolved issues in their negotiating that they need to get taken care of. Fair wages, safer working conditions, the right to retire with dignity. I'm not exactly sure what they're asking for with that. And also the expansion of services at the public post office. So those tend to be the concerns they have right now, which is really interesting because I know the news last week said that they were having an issue with mail delivery, and because Canada Post wants to go to weekend delivery, not mail delivery, sorry, parcels. They want to start delivering parcels on the weekend, but that must have been resolved because that's no longer a concern. So what does this mean? Of course, basically, mail parcels are not going to be delivered for the duration of that strike. And they're actually going to close down some of the post offices as well. They did say that once the strike is over, once they have a resolution, they're not going to be able to start delivering mail next day. It's going to basically, they're going to need additional time to get everything all ramped up again. And to get the parcels moving again. Like, I don't know if any of you guys have ever been behind the scenes at Canada Post. There's a lot of stuff there. Just the whole sorting thing. I was in the sorting facility. I went in there to get trained at the sorting facility in Halifax. Actually, I think the facility, was it on Halifax side or Dartmouth side? It was somewhere in that. I think it was on the Halifax side. Because I got hired by Canada Post one year to do Christmas support. This was at the beginning of the time when the internet had started really taking off, and I went through the training, all of that fun stuff, and I was waiting for them to call me. I even actually left a part-time job that I had at that time because I'm like, I got a job at Canada Post. I'm good for the next little while. I didn't get a single shift. Not a single shift. I basically got paid for the training. That was it. So they hired a bunch of us as they normally do, but that was the first year that they saw this massive drop in the amount of Christmas cards and stuff being sent through the system, so they didn't need the sorters. So that kind of sucked. But I technically was on the payroll at Canada Post for a tiny bit. Anyway, one other little thing on here. The government has appointed a mediator to come in and help, but they have said that they are not going to go to binding arbitration for Canada Post. So they're going to let them work it out. If the mediator helps, fantastic. Now, there is one other good piece of news. I think most provinces are finding ways to get support checks out, at least the ones that are due. I know in Ontario, there's a bunch of support checks due on the 20th, and they said that those will be delivered. So I don't know how they're being delivered, if it's just some Canada Post are coming just to deliver those supports. But yeah, if you're waiting for support, you're in good shape. You're okay. You're going to get your supports on the 20th, which is fantastic. I know now that's Ontario. So I think other provinces are looking at different methods. You have to sort of look in with your own province, obviously, because I heard something about Nova Scotia doing it a bit differently. So I just know in Ontario, that's kind of what they're going to be doing if you're waiting on a check. Oh boy, Canada Post. Oh, you gotta love it. You gotta love it. You just gotta love it. Oh boy. All right. All right, let's get caught up here. All right. Sammer is in the house with a hello all. Sammer says, voted in BN already. XEQT is nice, but it's just an ETF with lots of ETF into it. Just my opinion. Yeah, absolutely. Absolutely. I actually get one vote. I get one vote on this one, and I voted for BN because that's who I do want to do. But like I said, I'm going to do whoever wins because that's, I run a professional service here. Let's see. Michael says, did you see food companies make new lows like CAG, KHC, and CPB, and then HRL hit a new low, and think because Trump a pick of RFK? I've seen a few of these food companies go down. I'm not sure what the reason is, and that could be part of it. There's a lot of turmoil. I think we really need to sort of let this all settle down, and that should hopefully stop some of the bleeding in some of those U.S. Food companies. Wayne says the Canadian dollar is falling like a hot potato, trading at 69.88 against the U.S. dollar on Friday. Yeah. And that was an interesting thing. If you guys remember, a few weeks or so ago, we did a story that they were thinking that the Canadian dollar was going to get down to 70 cents. And a little bit later, it was even going to go as low as 68. Well, I think the 68 is looking more likely at this point. We have to sort of see. And here's the funny thing. If the U.S. doesn't rate cut, let's say they don't rate cut in December, and then we do a 50 basis points, that might be the beginning of our dollar falling just a little bit more. We'll have to see how this is all going to work out. The economy, I think right now is going to be, I don't want to say fun to watch because, obviously there are some people who are going to be suffering from it for sure. But it's going to be very, very interesting. All right. GID, I like some of the fast food coupons, but not the newspaperish ones. Okay, fair enough. Gosh, coffee's good. I hope you guys are enjoying coffee as well. All right, and Sean says sold my BCE. I'll tell you, it's hard. It's hard to be a BCE fan nowadays. They have, they've fallen, they've fallen down to like, what are they, 39 something right now? It is difficult to hold on. I think long term they're going to be fine. Like I'm still bullish on the long term. I'm not ready. Like I'm not going to sell. I'll wait out. I'll wait them out. But I can definitely say there's probably going to be a little bit more pain, I think, before we start to see things move up. You got to realize one of the interesting things with BCE and looking at investors. So when they went and sold Maple Leaf Entertainment to Rogers, what happened is investors were excited. They were like, yes, this is a great move. We can use those, that's billions of dollars we can put to take down that debt a little bit. And that was exciting, and it looked like things were on the up. But then, then Bell sort of surprised everybody and, bought a telecom company on the west coast of the U.S. And that money all went there, plus some more. That investors didn't like that. They did not like that. And we've seen what happened to BCE because of that. So yeah, it's not great. It's not great. And I think it's going to take a little bit to get investors happy again. Now, if we keep on getting aggressive rate cuts, that will definitely help. That will be lowering that debt cost big time. But right now I can understand why. Now, hopefully, now I know 100% Sean probably took a loss because unless he bought his BCE like 14 years ago or something. The only thing I'm hoping that you've made a nice sideways movement. If you were holding BCE outside of your registered account, then that might be a good tax loss harvesting opportunity. Just something to put in the thing. All right. GID says, "How will Santa get my letter?" You'll have to email Santa this year, GID. Use the email. I'm not even sure what Santa's email address is. Is it like, Santa@northpole.com or something? I honestly don't know. But yeah, email Santa. Michael says, regarding food companies, Highliner is doing well. Highliner. Isn't that the one that had those commercials? Have you ever been to sea, Billy? But yeah, I do love Highliner. Nice. Kevin Kaz says, late but here. Good afternoon, gang. Good to see you, Kevin Kaz. Good to see you. King of Day says, went to McDonald's yesterday. Very disappointed with the chicken burger. Yeah. You know what? I mean, I've never liked the McDonald's chicken burger. And I'll tell you why. I find it too crunchy. I've been always, if it's chicken burgers, I've liked that big, the one that they make at Burger King. It's nice. It's a big, it's just big. It's easier. And it also tastes really good with cheese. Now, they may have changed that. Like, I haven't had a chicken burger at Burger King in probably a decade. But gosh, it used to be really good. Vic says, on a mandated break, Pfizer or Bell or Royal Bank on the dip for a large swing, or should I move 100K to Wealthsimple and the free iPhone 16? Well, do you need an iPhone 16? That's, it's one of those things. Just keep in mind, if you do move it over there, it's fine. If you need an iPhone 16, I'd do it. Yeah, I would definitely do it. Yeah, why not? And you can actually do both, right? You could move your 100,000 over to Wealthsimple, get your iPhone 16, then you could still make a move over there. If that's what you're looking to do, whether it be, Bell, Royal Bank, or even Pfizer. Yeah, that's always an idea. Now, keep in mind, though, Vic, I think Pfizer definitely has more room to fall. Not much, though. Not much. Because they're pretty low as they are. And same idea with BCE. But, yeah, it could be very interesting to see what you do. I asked earlier for 30 likes. We're at 29, guys. Throw one more. Throw one more up there. Let's get that 30. No scratch lifestyle. Nice. Let's see. One of the things I look for before buying a stock is the total debt. Is it normal for Canadian banks to have a lot of debt? Yes. Yes, it is. You got to realize this. When you're looking at debt, what you have to... Oh, this is funny. So whoever number 30 is, they accidentally hit dislike first, and then they changed it back to like. I love it. I could never see this before. I can see this now. I don't know who it was, but that was awesome. I love it. I love it. Right. Okay. So basically, when you're dealing in financials, you're dealing with banks, debt is part of what they do. So you have to sort of look at it this way. Some companies, debt is part of their game plan. So banks, for example, when you make a deposit at a bank, so let's say you go to the bank and you deposit $100,000. Well, guess what? They owe you $100,000. So that actually is a form of debt. And a lot of the debt that happens is just part of their business model. So when banks have higher debt levels, you got to take it with a grain of salt. That's the way banks are. Now, when you look at other companies, that don't really work in financials, well, then at that point, yeah, you want to hold them to a higher standard when it comes to debts. So, that's kind of that whole thing. But and GID is saying Canadian banks are not the play right now. Canadian banks are sitting in this position where they've done well. They have done well recently. They have a lot of them have made well, other than like TD and BMO. But you look at National Bank. National Bank and CIBC, they have both absolutely done very well. But after we sort of put that into perspective, what we're looking at is what we're looking at with banks is they've got this huge wave of mortgages. It's still coming. It's still coming. However, the aggressive rate hikes is certainly helping. So as mortgages come up for renewal, all of these mortgages that were taken out during the pandemic, the lower the rates are going to be, that's going to save some people. Some people will be able to afford them with lower rates. But it's not going to save everybody. There will be foreclosures. There will be people who get wrecked when they have to renew. But hopefully, and this is kind of the double-edged thing. Like right now, our economy is hurting. Even though the Bank of Canada won't admit it, they're trying to prevent us from falling into a recession. That's why we're getting these aggressive rate hikes. That's why we're going to follow a step with the United States when it comes to the rate hiking or the rate cutting. And that will hurt our dollar. That will drop the dollar. No doubt about it. But it may save some people when it comes to their homes. So you kind of have to look at it from both perspectives. But it's not going to save everybody. There were people who took out, who basically couldn't afford, who really couldn't afford to buy a house during the pandemic. But when you had interest rates so close to zero, and they thought they were going to be there for a long time, yeah, a lot of them did get in. Hopefully, if we ever get into a situation like that again, and I think the banks have learned a lesson, I think the stress testing on that will be much more. Even going forward, I think that stress testing will be huge. And it should hopefully prevent us from getting into this situation again. It doesn't help us get out of it right now, but it will help for the next time. Unfortunately, not this time. All right. Patricia says BCE is having a tough time. Hopefully they get things turned around. Yeah, absolutely. That's what I'd like to see. I'm still I'm still going to add to them while they're down at the 39 because I know on the other side of this, like right now, and here's the thing, yes, I talked about investors being angry at Bell, but when you look at it from a business perspective, they are in they're in this country here where there's not a lot of room to really grow anymore. I mean, pretty much everything is saturated when you look at between Bell, Rogers, and TELUS. They've got things locked down. So there's not a lot of growth potential here. So what they've done is they're saying, let's step into the U.S. market. And there's a lot of growth potential because there's so much competition. And that can actually work in your favor because, all you have to do is come in with a lower price and you're going to start building from that point. So that's kind of where they're thinking is that, if we can't expand up here, let's expand down there. And I do think that's going to be very, very interesting. All right. Ian says, did you know that Scott's Due Diligence does a live stream at the same time as you? Oh, Scott, don't let me down. Don't let me down, Scott. Actually, I know he did. I know he did one on Saturday, but Scott. That's fine. I mean, Scott's mostly covering mostly U.S. stuff, but, he does, of course, and this is what I love about Scott. Scott will, of course, start pulling in some of the Canadian stuff as well, and that's pretty cool. All right. Vic says, would love to open a Chick-fil-A franchise, but they would never accept me, my liberal views, nor my LGBTQ2 plus friends. All right. Try saying that 5 times fast. Yeah. Let's see. Vic says, sure, was nice to have Scott join a live stream last week. The other Scott. Yeah. Oh, yeah. We had both Scotts just at 2 different live streams. Scott's Stock Due Diligence was in here. What was that? Maybe 3-4 weeks ago. Yes, and the other Scott was in here. He could be here right now, Vic. He could be in the background lurking. I don't know. But yeah, it was. I knew that you'd like that. I knew you would like that. That was awesome. I was just like, I was so glad that you were here when it happened. Vic says, or sorry, Vic says, King a Day says, he is going to be moving 100K to Wealthsimple in January for the Mac Air. I don't need it, hoping to sell it. I am an Android Windows guy through and through. Okay. But you know what? That's what. Why not? Why not sell it if you're not into Macs? Now hopefully King a Day doesn't lose any respect. But my entire system is it's all Macs. It's completely it's a Mac system fully. So right now I'm streaming on a Mac Studio. Then I've got over here, I got my MacBook Pro. I'm actually, the camera is an iPhone because it's actually better than the webcam on any of the things that I have. And it fits in nice. It's actually really good quality. I'm enjoying it. But yeah, I got everything from my, there's my AirPods, Mac Watch, all of that fun stuff. But yeah, but I will say, when it comes to video editing, the studio, I can edit really fast. It's very, very good. So it makes doing what I do on YouTube a lot easier. I'll say this: I don't hate Windows, because you sort of, they kind of like, it's Mac versus Windows, or Mac versus Samsung's, or I guess Android. I'm okay with them. This ecosystem works for my needs. But I have had Windows systems before. And one of these days I'll probably buy a Windows computer just for some other stuff that perhaps it's just one of those things. Like, I guess, gaming is better, for example, for most games are better on a Windows system. All right. Vic says, King a Day, you can easily swing trade that 100K to make the profit to get your own iMac. Oh, there you go. Vic is trying to convert you. Oh, boy. Terry says, in light of the Canada Post strike, perhaps segue into Brothers Johnson Strawberry Letter 23. Just saying. Oh, boy. Vic says, just buy a bank in the dip and sell it 2% and bang, new iMac. Yeah, you gotta like it. You gotta like it. Let's see. Ian says, I think I'm going to keep my dividends in cash and wait for a correction. Not going to sell anything. Okay. This is one of these things here. We will be heading into a bear market eventually. I don't think it's happening this year. But yeah, there's a possibility in 2025 we could move into a bear market. I don't even think it'll be the first couple of quarters. I would say maybe by the summer. Maybe. This is just a maybe. Like right now, the data is still, it's still out there. But here's that thing. Most people make a lot of profit by buying in bear markets because you got a lot of deals. But here's that thing. To buy in a bear market, you kind of need to have money to spend. And that's where some people sort of don't look at it. So when we are in these markets with all-time highs, when we're in the middle of a bull market, do your normal dollar cost averaging. But there's nothing wrong with, let's say, for example, you invest, let's say you invest $1,000 a month. I'm just using that because that's simple. There's nothing saying that you have to invest that full $1,000. There's nothing wrong with maybe parking, like $100 a month or something into a cash ETF. And of course, the more you're investing, the higher you could make that. Maybe it's 10%. Maybe you want to park away 25%. Because what happens is, and why I say a cash ETF is you still want to get returns on that. But then, all of a sudden, we slip into a bear market, and let's say it comes fast and sudden. Well, you've now got cash. You've now, you're looking at some of these bottoms and you're like, oh boy. Imagine if the build up to the pandemic, you had put away a bunch of cash into a cash ETF. And when we had that March 2020 and everything went way, way down, just imagine some of the sales that you could have had. Because that's one of the things I hear. I remember in the last bear market, a lot of times I heard people saying, yeah, it's a bear market. These are great prices. I just don't have any money to invest. And that's why sometimes when you're in a bull market, it doesn't hurt to put away a little bit. Build up your cash position. And then, when you're at the bottom, like you're at the very bottom of that bear market, hopefully your cash position has actually gotten a lot lower. Like it could even, you could even take it to zero if you really want to. Because, these are things you're going to build your profit. And then once we move out of the bear market and start moving back into a bull market, then you start building up that cash position again. So when people look at like Warren Buffett, and he's been building up, I think like 8 quarters in a row, he's been building it up. He's getting ready. He may not come out publicly and say, yeah, I'm getting ready for a bear market, but he is. It may not, and that's the thing. It's not necessarily a tomorrow. It's not necessarily 2-3 months. It could be 6 months. It could be 8 months. It could be a year away. If it's a year away, he can still build up a lot of cash. And then when everything is at rock bottom, we're in that vicinity, he can start dollar cost averaging through some of the really good deals that are out there. And all of a sudden, that's how Warren Buffett and Berkshire Hathaway make so much money. They're very good at it. They do this all the time. And that's kind of that whole thing. So when people hear that he's putting away money, they're like, oh my God, the market's going to crash tomorrow because Warren Buffett's putting away money. No, he's putting away money because it's a smart thing to do. He's preparing for whenever it does happen. So you got to keep it in mind. But keep in mind, if you're like saying, oh, okay, well now I have time because, maybe it's not going to happen in 6-8 months, but, that means you've only got 6 or 8 months to maybe squirrel away a little bit. So that way there you can get some of the good deals when we do go down. Just something to keep in mind, guys. All right. Where was I at? Right here. GID says, once you are in the Apple system, you can't swap out. The plugs aren't comparable or compatible. They're actually supposed to be changing a lot of that. So they're looking at going to USB-C. I think they'll still have their Thunderbolt for some things, but it's getting a little bit more friendly. And I don't think it's because Apple chose to. I think it's because there's been some sort of court battles that are leading in that direction. Vic says, MacBook Pro for free, just move $500,000 to Wealthsimple. Too rich for me. Yeah, well, that's $500,000. That'd be fantastic. Let's see, Candace, I love your cross-Canada lookout. You gotta love it. Yeah, that was kind of interesting. We were talking about that before. It's one of the neat things. This is what I love about this show right now. Like, we have people here. I will bet you we have somebody here from every province. I will bet you we have someone here for every province. And I'm not going to tell you guys to call it out. You can if you want. I don't care. But I'm betting we have somebody here from every province. And here's the worst thing. I could throw up a poll, but it only gives me a limited number of things. Otherwise, I would do it for like actually I would like to have 11. So we could do like each province and then the territories. We could combine the territories into one because, I don't know if I don't know if there's anyone here from the territories. If you are watching this from the Yukon, Northwest, or Nunavut, let me know. I'm kind of curious. I'm very, very curious. That would actually be, actually, believe it or not, if one of you are here from one of the territories, that would actually kind of make my day. I'd be like, I'd be very happy. All right, let's see here. Prairie says, Windows, Mac, Linux each have their own strength. Yeah, no, absolutely. Windows, very much strong. One of their strengths, of course, is gaming. And the fact that almost everybody has them. So, but of course, that also creates vulnerabilities. The big vulnerability with Windows is because most people are using Windows. Most viruses, computer viruses, are designed for the Windows OS, so for the Windows operating system. So that's why you have a bigger issue. Mac, once again, I don't want to say that you don't have viruses for Mac. There are Mac viruses out there. but they're a lot less. So you can pretty much, with a Mac, you could pretty much run without a virus scanner. Uh, but you still want to be smart. Like you don't want to be, you don't want to be opening up strange attachments and things like that because there are Mac viruses. Linux is probably the safest of most of them. And there's not a lot of people running Linux. So, but a lot of the people who do run Linux are very, very technically competent for sure. All right, Terry says, I'm down for the MacBook from Wealth Simple. Yeah, so the 100K will only get you the base iPhone 16 or the MacBook Air. GID says, I'm calling the bear market to happen when the manufactured crisis happens in the middle of the Trump presidency. Okay, so you're thinking like 2 years. Oh, I'd be happy if the bull market went on for 2 years, but maybe, who knows? Ian says, waiting a few months to reinvest my dividends won't change my life, but it will make the correction less emotionally painful for me. Yeah, absolutely. All right, Paul says, sold some MicroStrategy 353 to buy Tesla 327 on November 12th. Then November 13th, sold Tesla at 328. So there's a dollar profit right there per share. And then bought back at 338. Okay, well that's not good. You want to try to get it a little bit lower if you can, but let's see. MicroStrategy 1 week up 14.7%, but my account up 26.5% on 1 week. Yeah, and I've been seeing a lot of Paul's data over on the Discord, and he's kicking it. He is kicking it. Even though, when you look at some of these, when he's buying back at 328, you're like, no, you've lost money there. But if you're buying back at 328 and then you resell it at like 358 or or something like that, you're making money. You're making money. Ryan is from Ontario. Well, represent Ontario. That's where I am as well, in Ontario. Let's see. Vic says, I bought MicroStrategy pre-split at 143, then sold way too soon. As long as you were in profits, though. Yeah, sometimes we do sell way too soon. But if you're in profits, then you can at least say, you know what? I sold in the green. Let's see. Prairie is in Manitoba. King of Day is over in Alberta. Vic is in Alberta. Stan is in Ontario. Vic is just north of Edmonton. There we go. And of course, Roku. There's Roku. Roku is in the territory of Stittsville. I love it. Now, Stittsville, for those of you who don't know, it's just outside of Ottawa. Roku says Chromebook first, Windows second. Okay, fair enough. Tom says, when I first moved 500K to Wealthsimple, they gave me 3K. Not sure if that's the equivalent of a MacBook Pro. Maybe a very basic model. Like my MacBook Pro, I think I spent about $5,000 on it. But it's also not the base model. GID says, what broker and account are you trading in, Paul? There we go. Jay is in BC. Here we go. We got a Haligonian. Jonathan is in Halifax. Kianakev is Van Isle, BC. A funny thing, I once told somebody I was a Haligonian, and they're like, well, you don't look like you come from hell. I'm like, no, that's what we call Halifax people. That was funny, though. So yeah, Kiev and Kaz over on Vancouver Island. I love Vancouver Island. Actually, I got family that lives there around Comox, so not too shabby. Ian is in Saskatchewan. Lisa's in Ontario, not far from Windsor. Okay, pretty cool. I actually almost lived in Windsor. Years ago when I first came to Ontario. Well, it's not my first time in Ontario, but when I was moving from Kelowna. And I moved to Hamilton, and I hated Hamilton. I realized it very quickly. I was like, I don't like Hamilton. So I was like, all right, one more move in me. And I had friends in Windsor, and I had friends in Ottawa at the time. So I flipped a coin. Like, I physically flipped a coin. And I was like, because I didn't know which one I wanted to go to. Ottawa won. And so that's how I ended up in Ottawa the first time. So always fun. I have actually moved on a coin flip. There we go. All right. Vic says thoughts on super microcomputer. Stay away from them. Um, I don't think you can save them right now. I mean, the fraud that they have been accused of, they're just sketchy. They're really sketchy. So I would not bank on trying to make any kind of profits with them or hoping you get a nice bounce back up. If anything, now with that being said, though, if the folks over at Wall Street Bets are looking for looking for a new short squeeze, well, maybe super microcomputer, because I imagine a lot of institutional investors might be shorting it at this point. So maybe if Wall Street Bets got in there on it, they might be able to give it a pump. But even then, unless you're at the beginning of the pump, you're probably in trouble if you try to invest in. So yeah. All right. Let's see. Kiev and Kes says, if you ever visit, I live in the valley and would love to meet you. Oh yeah, absolutely. I don't know when I'll get out that way, but that would be kind of cool. Jonathan says, Candace, can you wear your chicken burger t-shirt on stream someday? I don't actually have a chicken burger t-shirt, but chicken burger's good. Chicken burger's good. So for those of you who are not Nova Scotians, chicken burger is kind of a legendary little chicken burger joint in Bedford, Nova Scotia, just outside of Halifax. Yeah, actually, one of my uncles, this is a sad story. I mean, he had cancer and he was going to die. But his family wanted to know, before he went into hospice, it was like, hey, this is your last time to eat out. Where do you want to go? And he was like, chicken burger. That was where he wanted to go. So nothing too shabby about that. All right. Let's get to our next story. All right, here we go. We got a U.S. update, just a little bit. So we did have, of course, we had the CPI and the PPI drop during the week. Month over month, CPI came in at 0.2%. That's exactly where it was last month. And that was exactly what we expected. Year over year, though, we did come in at 2.6%. So last month it was 2.4. So inflation went up a little bit. But we expected it. It wasn't outside of what was expected. So that really, it's not that bad. Core came in 0.3 month over month. That's exactly what we expected. Same as last month. Same idea with year over year core. Came in at 3.3. Exactly what we expected. So that's one of the reasons that on Wednesday when the CPI dropped, we actually did have a green day. Not by much, but we didn't have that huge reaction we normally do if there's even a tiny bit of a hint of inflation in there. Now, on Thursday, the producers' price index dropped. So this is your wholesale inflation. Month over month came in at 0.2%, exactly what was expected, same as where it was last month. But with this one here, year over year came in at 2.4%. Last month it was at 1.9, so it did go up a little bit. Also, core year over year came in at 3.5 when it was 3.3 last month. So we did have a little bit of it happening up there in the U.S. So we had a little bit of inflation. It may have helped a little bit with some of the uncertainty of what's happening this week. Now, after the CPI, it was thought that the chances of the Feds cutting another 25 basis points rose from about 50%. It was about a 50-50 coin toss before this, raising it up to about 66. But with these PPI numbers, I think we're probably close to a 50-50 on whether or not the U.S. cuts in December. I'm hoping they do. Because that will certainly be good for Canada, because if we do a 50 basis points, at least we're not getting too far out of kilter. So I'd love to see that happen. So, yeah. But for the most part, these numbers came in as expected. There wasn't a lot of surprises. So definitely something to think about here. All right. Vic said, lost 20K on emerge ETFs, and Supermicro sounds similar with concerns from auditors. Yeah, that's what I'm saying. I would leave them alone. I wouldn't. I would leave them alone. Tom is coming in from Kitchener, Ontario. Awesome. All right. Terry says, I write not very talented stories on Cura. Why am I constantly contacted by Cura users who practically insist I log into WhatsApp and or Zangy? Thanks. I would not do that. I would not do that. Here's this thing about WhatsApp. That is primarily used by, I don't want to say primarily, it's used a lot by scammers. So anytime they are, somebody who you don't know is asking you to connect with you on WhatsApp, or I don't know, I'm not familiar with Zangy, but it's probably the same kind of idea. I would be highly, highly hesitant, unless it's a situation where you're dealing with somebody who uses WhatsApp, but it's somebody that you reached out to and you're using, then that might be a different situation. But I would be very, very careful, Terry, about that, just because you don't want to get yourself scammed, and they're very good at what they do. So you might think I'm too smart to be scammed. There's a lot of people who were scammed who thought that as well. I honestly do think that you're too smart to be scammed, but it can happen. It can happen. All right. JJ is back. Was listening in the background the entire time. Couldn't touch my phone the entire time, so it was in my pocket. Uh-oh. Let's see. JJ, where in Alberta? I think JJ's in Montreal, I believe. Unless JJ has moved. Paul says Windows 11 will not let lots of PCs upgrade from Windows 10. Will be an increase in Linux. Yes. Yeah. And that does happen. I definitely understand. You have to have a cutoff as to when you're no longer going to support things. But from Windows 10 to 11, to me, that's not, unless, and I don't know, I haven't checked out too much on the specifications of Windows 11. The only thing I could think of is if Windows 11 is maybe going a lot deeper into AI that maybe Windows 10 wasn't built to handle. Maybe that might be why, but that's a 100% speculation, so take that with a grain of salt because I don't know. All right. And let's see. JJ says from Alberta. Montreal. Sorry, not from Alberta. Montreal, Quebec. Not moved, but might visit Edmonton and Calgary. Yeah. And I love Calgary. I used to live in Calgary, actually. So definitely a fun place. And I used to go to Edmonton every so often. When I was a national training and quality manager for an internet company, they had a call center in Edmonton. So I used to go up there every so often. Always loved it. Got to see the West Edmonton Mall. Definitely an experience worth doing. All right. Let's talk a little bit about some strikes. So the port strikes are over. And we're not just talking about Vancouver. We're also talking about Montreal. The Fed stepped in this week. And they used binding arbitration. I know some people are not happy about that, but I understand why they did it. I understand because, right now we're at a precarious point in our recovery that we really can't afford to have massive impacts on our supply chain at this point. I think that's why the government stepped in. And you guys know I will criticize the current government a lot. And I don't like binding arbitration at all, but I understand. I understand why they did it. That's all I'm going to say on that, at least on the government. But it was estimated that these combined strikes were going to be looking at, basically they would have been hurting us by about 1.3 billion worth of trade every single day. And I do understand why they jumped in. Basically these impacts to that supply chain were really going to put our financial recovery into a little bit of jeopardy. Now, they did that. They did it. This is not the first time. If you guys remember, we had the rail strikes back in August, and that was costing us $1 billion a day, and they stepped in there as well. So it's it kind of shows that right now that's kind of that policy that they're going to step in. Now, this is an interesting thing. In the last 2 years, We've actually seen 62 work shortages in the transportation sector. That's huge. Now, here's where the danger does fit in with what's going on right now. Is that on the international stage, Canada, they're starting to get, we're starting to get a reputation of being unreliable as a trade partner because, we can't seem to keep up our own supply chain. In fact, the CEO of of Canadian Pacific, Kansas City, he says that shippers are actually opting for less efficient, more expensive routes just because they're not sure if they can trust the Canadian supply chain. So that's definitely some interesting thing. The other issue too, and this is going basically on the other side, these are workers who are all of a sudden, it's almost like their rights are being stepped on. So they're feeling a little bit disenfranchised when it comes to what's been happening with, with they can't really bargain. So only thing I can hope, and I do hope this, I hope that the binding arbitration, I hope they're fair. I really hope they're fair, and give those employees a fair shake because, it's tough. It's a tough place to be in. All right. Paul is mentioning Wealth Simple. All right. Terry says yes. Go CPKC and TTNM. Vic says anytime inflation goes crazy, labor strife is bound to occur. Oh yeah, absolutely. And that's the thing. You want to keep up with your cost of living, and it's kind of, and also right now, if you think about it strike wise, look at the ports. The fact that we are in that recovery phase, or the workers know that this is the perfect time to strike. And they probably had a good idea that probably might happen. But you take your chance. You play your cards. That's what they did. They played their cards. It didn't work out because the dealer was on. The dealer was just like, this game is over. We're finishing it. Here we go. Yeah. What can you say? Prairie says, a primary upgrade requirement for Windows 11 is that your hardware supports and has a trusted platform module. So a TPM 2.0 chip. Most Windows 10 systems only have TPM 1.0 chip. So there we go. So obviously the the back end of Windows 11 requires a more advanced chip than what Windows 10 have. So that's probably not good. Now I imagine the people who bought Windows 10 recently some of them probably have the right chip, and those are probably the ones that can upgrade. But it does happen. I'll tell you a funny thing. Back in the day, when I used to work at Compaq, actually, not that far from Stittsville, out there in Bell's Corners, we used to support our Compaq computers, so I did troubleshooting and things like that. And I got a call one day, and this person was like, "Yeah, I bought this computer, Compaq, from Walmart, and it's not working. I can't get it. I can't figure it out." So at that point, this was around the time of Windows Millennium. So I says, "Okay, well let's take a look. What exactly is it?" He gave me the model number. It didn't even come up, and then he started reading stuff from me on the box, and apparently it was an old computer with Windows 3.1. So we're basically looking at a DOS operating system with a bit of a GUI on top of it. And I was just like, oh boy. And the thing is, they got warranty. They had warranty for a year because, that was just how everything was set up. So what had happened was apparently Walmart had a pallet of them in the back of one of their warehouses that they sort of forgot about for like a long time. And they found it, and they're like, oh, let's just blow these out. We'll sell them off really cheap and get rid of them. And those people all got full warranty. And so I was just like, okay, does it come with 6 discs? They're going to be kind of square, about 3 inches by 3 inches, something like that. So yeah, let's put them in and reinstall everything. I felt bad for them because what are you going to do in an internet world with a 3.1? I mean, you can get internet on it, but you're pretty limited to what how useful that computer would be. All right. All right, let's see here. Prairie says software keys are stored in the TPM chips. Okay, fair enough. Tom says, just wondering what your take is on MIC funds for income. All right, so MIC, mortgage investment companies. I do like right now. Timber Creek Financial is one of my favorites. So they're down a little bit right now, but as these rate cuts continue, I am definitely expecting to see a bounce back in REITs, and MICs will follow as well. One of the things I do like, so with Timber Creek Financial, even through the bear market, even through the aggressive rate hikes when they were going down, they've been very reliable with their dividends. So I think it's a fine choice. Like, I think it's a good option personally. Now, I have not looked at every MIC, obviously. I have looked at Timber Creek Financial, but based on them, they've done it well. I would, of course, want to definitely do your due diligence if there is a different one that you're looking at. Vic says, yeah, just like air brakes require a bleed, reset, and repressure. All right. All right. Vic says, gotta hit the road Wednesday. Catch you then. Yeah, we'll be back here. Wednesday's going to be a lot of fun. NVIDIA is doing their earnings Wednesday. So we'll get to sort of see the after hours and what's going to happen. Oh boy, that could be interesting for sure. Ian says, I heard that AI takes a crazy amount of energy. Yes, it does. I heard an AI image uses the same energy as a full charge on a cell phone, going to need more power stations. Yes. Ian, we have a story in the news about exactly this. Believe it or not, it's in there. But yeah, we're gonna hit that. I think it's the last story. I think it's story number 8. Let's see. Did you say Windows Millennia? Is that pre-XP? Yes. I think it went from Windows 95, Windows 98, Windows 98 Special Edition, Windows Millennium. They're kind of playing on the fact that we're hitting 2000. We used to make fun of Windows Millennium. It was so bad. Actually, during the time of Windows Millennium, a lot of us who are more techie, we actually, instead of running Windows ME, we used to run Windows 2000, so the Office version, because it was just so much more reliable. Then they came out with XP, and XP took a lot of the backbone of Windows 2000 and incorporated it onto the retail side. So that was absolutely fantastic. All right, here we go. Post XP. All right. Let's see. More accurately, Millennium was XP rebranded. It was changed a lot. Trust me. Millennium was a steaming pile of garbage. It really was. It was bad. But XP was awesome. XP was very, very awesome. Ian says, I think my laptop has Windows Vista. Oh boy. Yeah. See, in Windows Vista, I didn't like either. Windows 8 was fine. I found that in Windows, it was almost like every second version sucked. Almost like Star Trek movies. Kind of weird, but what can I say? All right. We're slowly getting through the news. So TELUS Health. This is kind of cool. So TELUS Health has opened up a clinic in Toronto. So they announced this week that they have opened a new public health primary care clinic in the heart of downtown Toronto. So basically, they're blending that virtual healthcare service that they have with traditional in-person care. So this clinic is set to accept basically 6,000 new patients. So that's not too shabby. They do have plans to further expand. They're going to start initially with Toronto. Then they are going to move out into Ontario. So currently in Toronto, this is staggering. 500,000 people in Toronto don't have a family doctor. That's a huge amount. Now, when you look to Ontario, it's 2.5 million people without a family doctor. And the rest of Canada, which they don't yet have plans to move outside of Ontario, but I imagine they will. The rest of Canada, we're looking at 6.5 million Canadians that lack a family doctor. So there's a huge need for this. And this is kind of interesting. Like when we talked about how Bell is expanding into the US, this is a good thing for TELUS. This is their opportunity to expand into healthcare and, maybe help the country in the process. If they can start providing family doctors and get more people, that's fantastic. So that might be their idea. Rogers, what are you going to do? Come on, Rogers, step up. Definitely step up. Yeah, I gotta say, they definitely have to step up for sure. All right. Jonathan says, I never had more blue screens than I did on Windows Millennium. Yes, the good old blue screen of death. I love it. I remember it. I remember it fondly. That was a lot of calls when I used to work at Compaq. Started with, my screen is blue. It's like, okay, let's reboot everything. Let's see if we can get you in here. And sometimes as well, I would look at some of the error messages because sometimes what it was is they had different things that were trying to take up sort of the same I/O ports, and it's been a long time, but there was always something that was causing it. Well, actually, one of the biggest issues with Compaq, and I'll tell you this right now, they went cheap on the power supplies. So as people got more and more into computers and started getting more and more into peripherals, it was taking a higher demand on the power supply, and that was causing freezes and lockups like crazy. So sometimes when traditional stuff wouldn't happen, I used to get on the phone because I was like level 2, and I'd call up a service center and say, look, let's instead of and I can't remember what the wattages are anymore, but instead of a 150 watt power supply, let's go to a 225, and they would do that, and that person would never have problems again. Everything worked fine, and that's from an insider. They went cheap on the power supplies, and that was what drove a lot of their calls to tech support. All right. Clippy. I remember Clippy. Yep. Now, and it's funny, I think I saw it, I don't know what, it was one of the talk shows. I think they did this thing on Clippy and AI, where Clippy was getting very aggressive because you weren't listening to Clippy, and I thought it was hilarious, but it's kind of interesting. Michael says, ASC pays a 18-cent dividend and earnings look okay, but keeps making a new low every day. Yeah. Well, let's see what happens, though, Michael. Let's see what happens once we start to get some back-to-back green days. Like, right now, and I think the NASDAQ has actually had like 6 red days in a row. So let's see what happens as we get back into the green and see if some of these companies that you're looking at can stop their bleeding. Because right now, there's a lot of bleeding in the market. But I'm still optimistic. Like I said, I'm optimistic for this month finishing in the green, and I'm also optimistic that we will have a green December, which also means, there's a good chance we might, actually, there's a very good chance we'll see a Santa Claus rally this year, because you will see some tax loss harvesting in the first half of December. You're definitely going to see some. So we'll have some red days in December for that, but that sets us up for that Santa Claus rally, and that's always kind of cool. All right. Terry says, yay, go TELUS. Absolutely. I'm before I had a family doctor, I was using TELUS. It was actually very convenient because, you get a doctor on your phone. It's like a video call, and they can write prescriptions and everything for you. I thought that was really convenient. All right. Up next. So Amazon is getting their chip on. So basically, Amazon Web Services, they're also working with Annapurna Labs, and they're expected to make this Trainium 2 AI chip that should be widely available by as early as next month. So the whole idea is that this chip is meant to cut Amazon's cloud computing costs and challenge NVIDIA's industry-leading data center GPUs. So they're sort of saying, well, come on, let's step in there. They're not the only one. Oh, excuse me, a little bit of a tickle in the throat, as I mentioned. But they're not the only cloud giant who's working on new chips. So Microsoft, they're looking at a Maya chip. They started work on that about a year ago. Google is working on a high-powered Trillium chip, and apparently that one's now available for preview. So currently, NVIDIA controls about 90% of the market for data center GPUs, and it's just not sustainable for the rapidly growing AI industry. Demand is pretty much at this point, we're already outpacing demand. Demand is already outpacing supply. There we go. And that's part of the reason that NVIDIA explodes in price so much. So right now, we do need a situation that there needs to be more viable options, just in case NVIDIA does run into any kind of a supply bottleneck. That's kind of that thing they're trying to get around. Like, will this hurt NVIDIA? That's, of course, the big question. I don't think it will. I don't think it will. I think there's room for everybody to start pulling out other chips. So all of that fun stuff. But yeah, and that's just going to be interesting. Will this type of move, will that actually impact NVIDIA on Wednesday when we look at what's going to happen? So it's something to keep in mind. Oh, God, that's great. Let's see. Michael says ASC just reported earnings and made a 55 profit and closed at 1177 is an oil tanker. Okay, fair enough. King of Day says good news about TELUS. Maybe I won't have to wait too long to sell my current shares. There we go. That could be. All right. Robert says, all right, Candace, do you have an opinion on mortgages? I have to sign tomorrow, and the bank is recommending a 3-year variable at about 5.25%. All right. Yeah, we're in a situation here where we know the rates are going to be going down over the next year. And they probably will stay down. I don't think we're going to see much move up. So variable is not a bad idea. So that, yeah, that's not a bad idea. I hate to say, I kind of agree with them. It just kind of sucks that you're looking at 5.25. But keep in mind, it's not a fixed variable, right? If it's a regular variable, that is going to come down. Then hopefully, if the rates stay down once we're finished the cycle, so and they believe that it's going to take probably another year to maybe a year and a half to get out of the rate cutting. So once we get there, then we're going to be, we're probably going to have a rate, prime rate down somewhere between 2.5 and 3%, I'm guessing. And if that's the case, then what you're going to see is there'll be the occasional hike, there'll be the occasional cut. So we should find this equilibrium there. And I think at that point, if you're looking to go into a fixed mortgage, that's probably going to be a better place to do it than now. So 5.25%, it's low. I would, Robert, one thing I would do is, I don't know if this will work or not, but I would look into some of these smaller mortgage companies that are trying to sort of jump ahead in the rate cuts, and just sort of, not to change, not to switch to one of them, but to just sort of get a price to come in with what they're charging and sort of maybe bring it up just to see if there's any wiggle room for them to bring that down a little bit, because sometimes they do have some wiggle room. Like for example, or even if you don't want to do that, I would come in and say, all right, well, that sounds like a great deal. Can you do 5%? Can you do 5? Just a thought, just to see if they have any wiggle room. I don't know if they will or not. Sometimes it's really hard with banks, but it never hurts to ask. And keep me updated. If they do, if they give you a deal, let me know. I would love to hear about that. All right. Let's see. Michael says Powell statement change and may not cut rates in December. Yeah, we're looking at about a 50-50 right now, Michael, whether or not we get a rate cut in December. All right. Now that I'm caught up again, let's pull up another story. So right now, it's actually kind of interesting. So local news. Local news has been absolutely struggling. And right now, they are calling on the feds to dedicate a portion of their advertising budgets to support Canadian independent media. One of the things that is hurting them, of course, is the fact that, well, Facebook won't show any of their stuff. Google will now. Now, Google is fine. They have struck a deal with the government. That's great. But right now, Facebook, no. You cannot share news on Facebook in Canada. It's simple as that. So right now, this is kind of interesting. So when I talked about what they're looking for, this is in place already in Ontario. So Ontario has a directive that came out last summer, and that requires the province's four largest government agencies to pay out at least 25% of their advertising budgets to local outlets. So this works out to roughly $25 million a year. This is huge, and we probably do need this for the country. So last year, at least 36 local news outlets closed business. They closed up, permanently shuttered themselves because, well, what can they do? And that's left a lot of communities scrambling to keep up with developments that don't get picked up by national news. So, all of your local material, like, there's just no way to disseminate it if you lose your local news. And we're talking about everything from updates on local governments, schools, businesses. Maybe there's some stuff because a water main broke that you need to get that out. There's just nothing you can do about it. Now in Ontario, the directive, they've already shown that it works. In fact, they not only have they provide relief to local news, some of these news are able to now hire more people to get just to get the job done more. So that's kind of moving in the opposite direction, and that's great. That's great. So, do we need this for Canada? I think we do. I'd like to see more local news. It's always a good thing. It's always a good thing for sure. Especially now, where even if there is some kind of news local, you can't share it on Facebook. So what are you going to do? So definitely like the local news. I think this is a move in the right direction. All right, we're almost at that energy story. We're almost there. That's the next story, guys. The next story. But oh, wait a minute. I missed Robert. Well, we'll get to you, Terry. Let's see. Thanks. Yes, regular variables, so I will benefit from the drops. I did try that with Wealthsimple offering mortgages now. They started at 569. Okay. Yeah. Well, 525 is much better. I don't know if you could get that's a whole thing. Sometimes bargaining works, sometimes it doesn't. It's actually funny. I went years ago. Tangent again. I went into my first ever salary negotiation. Now, at the time, this is when I became a training manager, a training and quality manager. At that time, I was making peanuts before I went in. So I came into the thing, and at that time, he was like, okay, it was like the manager of one of the directors. He was like, well, we would like to give you the position. We can offer you 40,000. And I was there, and I'm like, oh my God, that's a lot more than I make now. I was ready to take it. I was just ready. But I paused, and he completely misread. He misread me 100%. Because then he was like, okay, all right, I see you're not happy with that. I am authorized to go as high as 50,000. And I was like, deal. I mean, I was totally willing to walk out of there with 40,000. But just because I paused, I ended up getting another 10,000. But now, today, if I went into a salary negotiation, I'm going to be ruthless. And believe it or not, and this is, a lot of people get to things like, okay, I don't want to be greedy. I don't want to come off as being too aggressive. Believe it or not, a lot of, if you're in a role that, that you can negotiate a salary, it almost looks bad on you if you don't try. So it's just one of those things. I mean, it shows that initiative, and I think you'd be surprised. Like, they're always going to come in with the low ball. They're always going to lowball you first. They absolutely will. And that's why you want to come back. And the best way to do it is, let's say you're looking at a job, and let's say you want, well, we'll use today's values. So let's say you are looking to get 75,000. So you'll go in there and they might throw 60 at you. And you're not going to say, "Oh, how about 75?" Because they might try to still bring you down. So you're going to go 85. And maybe then they'll come back, with 70. And then you'll be like, 75, and you got a deal. And they'll probably give it to you. So it's just, it's the art of negotiation. Because nobody is going to negotiate for you. All they're going to do is try to take you at the lowest price they can. That's not what, but they have a range of what you're worth. So as long as where you think you should be paid is, if it's at the top part of that range, you got to work it to get there, but you can do it. You can absolutely do it. All right. Now, Terry, now we got to you, Terry. Let's see. The banks are so unscootable that an associate was asked if they wanted their mortgage renewed, a full year of mortgage maturity. Bad form in my books. BNS, by the way. Tisk, tisk, tisk. Yeah. Yeah. Scotiabank sometimes has, I've seen some questionable things in the last few years with Scotiabank. So, yeah, I can understand you feeling that way about them for sure. Michael says, JNPR getting bought by HPE, but just look at JNPR drop like a rock Friday. Wow. Yeah. And we can look at some of these things after the news is done, Michael, if you want. But let's get to our final story. I want to get this out of the way just in case. Here we go. Let's go here. Here we go. So, Canada is set to become a critical producer of uranium. So that's supposed to be uranium in the picture, by the way. So in fact, right now, actually, Saskatchewan, there's a place in Saskatchewan called Athabasca. It's the Athabasca region of Saskatchewan. It has some of the highest quality uranium out there. So that's huge. That's huge for Saskatchewan, huge for Canada. And here's the thing. Why is this so important? Because the demand for uranium, and I've been talking about this quite a bit, it's going up. And we're talking worldwide. So the U.S. government, they just released a plan to triple their nuclear energy capacity by 2050. So that includes, they're going to be building new reactors. They're going to be restarting plants, and they're going to be upgrading current facilities that are already in operation. Now, that's the U.S. Outside of the U.S., there are about 65 reactors under construction right now. Now, a good chunk of them, though, are in China and India, just to point that out. Part of the reason for all of this is because of, well, AI. AI is playing a role in the demand because, well, AI requires a lot of energy. So, looking up, making a picture on AI using the same amount of power as charging your phone, that all adds up. And AI is about to get even crazier. There's been rumors that OpenAI is very close to something called AGI, which is Artificial General Intelligence. So that's sort of like the next big step in AI, and that's going to take a lot of power. So it's actually really, really huge, and there's going to be just a huge demand for uranium. And Canada right now is set. Canada is set to become the world's leader, like the actual number one country. Right now, I believe it's Kazakhstan? But they're going to drop down. They're going to drop down for sure. And right now, as it is, companies like right now, Microsoft, Alphabet, Amazon, Nvidia, they've all been investing billions of dollars in nuclear energy. They don't do that if they know what's coming. They're the ones designing a lot of this stuff. So it's out there. It's out there. I mean, we're gonna have if you're investing in uranium, and I know Chad is. I don't know if Chad's here today, but I know Chad's been investing, I think, in Chemico. You're gonna do well. You're gonna do well in the long term. And this is one of these things I've been sort of talking about. Like I do plan to do a nuclear investing video, maybe December. It's hard to say, but it's on my list for sure. All right, before we leave the news, we got a few other little things. So earnings coming out. We got George Weston and Metro, or a couple of the big ones for earnings. I think the banks are starting to get closer too. So we got that to look forward to. In the U.S., of course, it's Nvidia on Wednesday. We all know that. There are other companies having earnings, like some of the bigger companies, Walmart, Target, Lowe's, for example. So we do have some interesting things coming out. Not a lot on the U.S. docket, though, in the next week. Canada, though, it's our turn for CPI and PPI to see if inflation is still coming down. Now, these will be, I believe these are going to be the last ones, last CPI and PPI before the meeting in December for our rate cut. We also have retail sales coming out on Friday. So we got a little bit of stuff coming out for sure, which is fantastic. Let me see. Vineet says, "Wow, another long stream. Is it a long stream? Oh, yeah, it's an hour and a half right now. It's still in the medium. It's still in the medium category." Ian says, "I own a lot of stock in BNS, but I would never want to get a loan from them." Yeah, I agree. I agree 100%. Let's see. Terry says, "You own a great show that unites a nation that is anything but united. Take a bow, Mountain Finance." I try. No, I mean, this is a fantastic... I mean, we're going on a tangent again. I love Canada. I love Canadians. I love Nova Scotians. I love Ontarians, I guess. I don't even know what we call ourselves. I love the prairies. I love Alberta. I love BC. And it's kind of the thing. I love Quebec. I cannot forget Quebec, or New Brunswick, or PEI, or Newfoundland. I mean, or the territories. I mean, this is a fantastic country. One of the things, like, I've lived in a lot of different provinces. I've lived from coast to coast. I have met so many really cool people along the ways, and I've seen so many almost different societies. Like, you look at the pace of things in Nova Scotia, compare it to Vancouver, night and day. Ontario, completely different again. Alberta, another difference right there. But I think it's all very special. And to me, it doesn't matter to me. Like, I don't care who's in power. I don't care who your governor. I was gonna say your governor. I don't care who your premier is. What their affiliation is. What I do care about is I care about the people. I care about the fact that we have such a great, diverse group of people. It's fantastic. There's so many things that you can do in Canada, and there's so many things to experience. So, a lot of people, they talk about, I want to take a vacation. I want to go to Europe, or I want to go somewhere in the U.S. I'm like, why don't you just vacation in Canada? If you've never been to BC, you're missing a lot, or if you've never been to the Maritimes, you're missing a lot. If you've never been to Ontario, you're missing a lot, and you can say that for any of the provinces, really. You could argue about the prairies because it is very flat, but there's cool things you can do in the prairies. Like, if you've never gone out into the middle of the prairies at night, when it's warm, of course, and just looked up at all of the stars without having to deal with a higher horizon, it's just incredible. That's something you'll never really experience too many other places. Well, maybe if you're out on the middle of the ocean, it would be kind of similar, but it's a great country. I love this country, and that's one of the things I like about this channel is that, we're a finance channel, sure, but at the same time, we're a people channel. We're a Canadian channel. And we have our American friends here. We got our people like, like Michael. Michael's in the U.S. We got a whole bunch of this is a great crew, and you guys are all fantastic. So I love it. Anyway, that was my little tangent. It was all thanks to Terry. All right, 9 says late, but yes, Windows Me was terrible. Yeah, exactly. Alberto says, do you think RBC stock a good buy, but cost a lot? All right, let's actually, guys. Now that we're done the news, we're gonna move into the there we go. We're gonna move in here. You guys can actually see more now of the no of the no thingy there. But yeah, that's kind of cool. All right. As I said, I have more tiles coming, so that those will be going all the way over to the end. Now I don't know when they're gonna get here. Like I think Amazon said something like towards the end of the month or something. But yeah, it's fine. It's fine. We're okay. All right. Alberto asked about RBC. All right. Give me a second here. Let's take a look here. Here we go. Bang. Here we go. I love it. All right. Now we get everything up here. RBC. Let's pull it up. Sorry. RBC is RY. Duh. Oh boy. You gotta love it. You gotta love it. All right. So you can sort of see. Let's go 3 years. Actually, I want to go 5 years for a moment. All right, so you guys can see back here. It's funny that I now have to go 5 years to see the pandemic. Oh boy, time is really flying by. But yeah, since the pandemic, and I'm going to go back 10 years. So you can sort of see they were on this upward trajectory. They had the pandemic, and then they recovered and got right back on that same trajectory. And then, of course, we had a bear market. We had the aggressive rate hikes, all of that fun stuff in here. But now they're doing well again. They're back up. They're kind of doing sort of like this. They're doing a peak like this. So you might be thinking, oh, are they going to be heading back down for a little bit? They're probably going to head down a little bit. Like they do look like they're a little bit higher than they should be when you look at this whole slope. They're not higher, like they're not too high, but they are higher than I think they should be. So they're probably, I would say at this point now, they probably should be around 164, somewhere in that vicinity. Just when you sort of look at the natural slope of what's happening, if you kind of eyeball it, I mean, you can look, of course, you can do discounted cash flow models, all that fun stuff to find out what their true value is. And it's probably higher than this. But I'm just sort of going, but not so much a discounted cash flow model, but this is what Candace's eyes are saying. My eyes are saying they're a little bit higher than they should be. So you may see a small correction. So if you are looking to buy, that might be an opportunity. Usually anything that's growing like this, I usually will say, don't really look for specific points. Dollar cost average would be probably your better option here. Yeah, I would dollar cost average, but I don't know if I'd go all in right now on them. I think that there's some room for them to have a little bit of a correction. But we'll see. We'll see. All right. Kevin Cass says, any thoughts on Polaris? PIF or Polaris. All right. Let's pull up our good old PI. Whoa. What was I typing in? I was like typing in. It was like I was a cat. I was like walking across a keyboard typing. All right. So Polaris is an energy company here. Let's go back just to the year for the moment. All right. So they have. They haven't really been moving in a good direction too much. They've had a little bit of ups, but yeah, there's a bit of volatility flying around here. Now let's take a look here and see. So they got a pretty big dividend, 6.662%. It's quarterly. All right, it's in U.S., so 15 U.S. cents. So that's probably like what, 21 cents maybe. They are profitable, which is fantastic. All right, let's come down here and take a gander at a couple of things here. They got a little bit of debt, 62% debt to equity ratio. The return on equity is a little low, 2.68. Return on assets, 1.39. It looks like they have been very reliable with their dividend, which is great. But I think they're still going to be fine. Part of it is they have a bigger focus on renewable energy, and that's kind of we're moving in that direction, but at the same time, it's not a fast crawl. So I still think traditional energy, natural gas, oil is probably still going to make more money than renewable, but that will shift. That will shift. So if you're looking at this long term, I would say yeah, absolutely. But if you're looking to make some faster profits, I'd be a little cautious. But I do think long term they're going to probably do fine. So anyway, all right, let's see here. What about Stinky St. John? Oh, it's the singular, so that's the New Brunswick one. I don't know. I don't think I've honestly. I don't think I've ever. I think I drove through St. John, but I've never really spent any time there, so I don't have an opinion. I spent a little tiny bit of time in Fredericton. I once spent a time somewhere in the middle of New Brunswick at a bar. Um, don't ask, don't ask. A funny story, but don't ask. So I'm not sure. Let's see. Tom says, maybe I misworded my question. I meant your thoughts on pooled mortgage investments. Oh, okay. So you're thinking, I'm trying to think of the name of it. I know what you're talking about. So it's basically, it's almost like you got a whole group of people pooling their money together to buy a house. And it's almost like you've got a share in that house. It's kind of a new concept. And I mean, I could see the potential in it, but here's the thing. We're in an environment right now where house prices have kind of stalled. So that's going to certainly impact this type of an investment. Keep in mind, though, real estate always does go up. So it may only be a temporary stall because real estate will turn around. It will start going back up again. And even now, in some places, real estate is still going up. I believe in Saskatchewan, there's still lots of room for real estate to go up. So it depends on how it's managed. But I haven't really looked a lot into them, Tom. So I don't want to give too much of an opinion on them for that simple reason. But it would be something worth for me to take a harder look at for sure. So I will do that. I will definitely do that. All right, King of Day says, we love you too, Candace. You rock. Oh, thank you. That's awesome. Robert says, you commented a few weeks ago that you were buying Air Canada under $16. So I put in an order for $15.99. It dropped to $16 and I missed it. Now it's $24.50. Oh, yes. Yeah. So that was kind of an interesting thing. So yeah, what I was doing with that is I had set up a swing trade within the 0 to 100K challenge. So every month that Air Canada was under 16, I was adding 5 shares to that position. And the goal was to sell it at 20. So that was kind of where I was at. Now, I did not expect Air Canada to explode as fast as it did. It did leave 16, and then it came in and it had a good earnings call, and that pushed it up. And then they announced that they were doing share buybacks. So they're basically buying back between this month and next November. They're buying back 10% of their outstanding shares. So that's kind of undoing a little bit of the damage from the pandemic when they diluted their shares a lot. So that's going to certainly help them. The rate cuts are helping them. So yeah, they're probably not going to drop down there again. But oh my God, I can't believe it. You missed it by a penny. Oh, yeah, it's kind of one of these things. And here's the thing. If you're looking to repeat with Air Canada, because they will come down again once all of the hysteria is finished. But they're probably not going to come down below 16 again. If I was going to set up a new Air Canada trade, I probably would set my limit at about 18. Even 19. I have to sort of see how far they come down when the hysteria ends. But right now, they're still doing fine. They're doing fantastic. But I am so sorry that you missed that by a penny, Robert. That sucks. That really sucks. I know some people didn't. We got at least one person in here who made a killing on that trade. Now, with the challenge, of course, what I did is I ended up selling at 21. I wish I hadn't, but it went up to about 21, a little bit over 21. It was up around 21.50. And I had put in a stop loss at 21 at that point, because that's how I was going to play that trade. I'm going to throw in a stop loss. It fell down. It fell down to 21. Stop loss was triggered, and then it went up, and it kept going. And I'm like, oh, of course. You just came down just to hit my stop loss to be in spite of me. So yeah, it happens. All right. Andrew wants to know, what do you think about NA.TO? So that is National Bank. I do like National Bank. So both National Bank and CIBC, they're right now leading the banks when it comes to overall growth over the last year. Like, look at this. I mean, a year ago, they were sitting at $90. They're now $133. Now, National Bank, and this is interesting too, because National Bank, they're buying Canadian Western Bank. So that's going to give them, like, National Bank did not have a lot of branches on the West Coast. This is giving them a considerable amount of presence on the West Coast, and it's really good for this bank. And I've got nothing bad to say about National Bank when it comes to investing. I think they're going to be fine. CIBC, they are doing a little bit better, but I think these are both doing really, really fantastic. And I can actually show you guys. Oh yes, I can show you guys. This is fantastic. Just give me a second here. Let's see, where is it? Technical insights. All right, now, I also want to do this with a line. All right, so let's do it. All right. That's not what I want. All right. Comparisons. There we go. All right. So let's put in BNS. Here we go. RY. BMO. All right. I think we already have National Bank there. All right. We have CM. There we go. All right. I'm missing something here, aren't I? I feel like I'm missing, what am I missing? Oh, TD. Yeah. Yeah, good old TD. All right, here we go. Perfect. Now, when you take a look, right now, that's 5 days, but let's go to 1 year. So this here is their total returns over the last year. And right now, at the bottom here, you can see, all right, you can see down here at the bottom, we got TD. So TD has a negative 7.40% return. Now, this is not dividends. We're not talking total returns. This is just their share price. So they're down 7.40%. At the top is CIBC. Look at that, 64.83% in their share price. National Bank is sitting here at, let's see here, 45.28%. So they're in second place. Then you got Royal Bank at 41.98%. Bank of Nova Scotia, 24.51%. And then what else do we have? BMO. BMO actually is starting to climb up, 17.59%. So good on them. TD still in the doghouse over all of that money laundering stuff. So, it's kind of sucky. All right. Ian says, Simply Wall Street says extended care fair market value is 162. It's 502% overvalued. 162, really? Had them for years, up 40% plus divs. Your thoughts? Might sell. Okay, well, let's see here. We'll head over here. EXE. Here we go. Extendicare. So 1014 right now. Oh boy, they must have had some good earnings there. That's a really big jump. Let's go to the last year. But yeah, this company has been absolutely exploding. And let's actually take a look at Simply. We'll pull them up as well. EXE. There we go. Extendicare. All right, let's take a look here. Valuation. We'll pull it in here. Yeah, look at this. That is quite the the overvalued amount. But what is driving this? Let's see here. No, this is all looking good. Like yeah, I see what it is. All right, so this is what I think is happening. So if you'll notice, in the last year, their earnings grew by 261.9%. So that is creating, I think that's inflating your values a little bit. So when you start to look in the future, because that's what a discounted cash flow does. It does estimates of revenue and cash over the next whatever time frame you set it at. But when you have something like this, a year where you had 261, your cash flow is going to get lower. There's no way around it. Unless something crazy is happening, this is going to go down. So they're not going to, their earnings next year will be considerably lower. So it'll be a bunch of negative numbers for probably the next 10 years. Even though they'll still be growing, they'll still be doing fine, but they'll have all of this negative numbers. So when you do, no, excuse me. So when you do when you do a discounted cash flow model, those negative numbers are going to basically send you to a lower value than what it really should be. So we're looking at, they're saying 168 fair value. Okay, that's based on the data. It's based on math, but that's skewed math, and that's kind of the things that happen. But if you want to look more realistically, this here is what the analysts are thinking. So the analysts right now are expecting it to be up around $10.50 in a year. So that's up about 3.6%. And that makes sense. It should slow down a little bit, but I think it's still going to be fine. And keep in mind that, even if this continues to be fine, and I think it will, you're also got a situation where, you have half decent yields. So you got 4.734%. So you got that coming for you. You're still going to get some good growth on this. The other thing too is, you can see that the first part of this explosive growth was after the rate cuts, because they own homes with mortgages, which means that as we lower them rates, their servicing on that is also coming down. So that's going to be a good thing for them as well. I'm actually bullish on this company. I personally, I don't think you should sell, but I mean, it's of course up to you. I mean, you do your own due diligence. But if I was in your situation, I probably would be asking myself, why would I sell this? And I can't come up with any good reasons to do it. Unless you're making a move, like if you're moving like a sideways movement, like maybe you're like saying, okay, well, I'm not happy with this one. Maybe I'll move over to SIA instead. And SIA, it's another very similar company. So Sienna Senior Living. All right, and we take that 1 year look, and you'll see. Now, they do have a little bit of a correction happening there, and that's fine. But the rate cuts are going to help them as well. They're doing the same kind of thing. So, you have lots of options for sure. All right. Let's see. Do you think BCE will rebound to $45 after the deal with Rogers is done? All right, well, let's take a look at BCE. Let's pull them up. We've been talking a lot about them today, but we haven't actually pulled them up. All right, here we go. Look at this. Oh my God, 37.81. Oh boy. If they stay down this low, I'll certainly buy some more in December. All right, let's actually, I want to come out to the 15-year. All right, so if you look at this, the last time they were this low was like 2011. Holy banana bread. So you're wondering if they're going to get to 45. I feel like they have to be close to the bottom. I really, really do. And now let's come in closer. We're going to come in closer so that we can sort of see this movement over here a little bit better. So we're going to come into 6 months. So they had a little bit of a thing, but I do feel like, if they go down further, I can't see them going down much further. But mind you, I didn't think they were going to go below 40 again, but then the whole thing with Rogers and the selling of the Maple Leaf yeah, that sort of pushed them. That was kind of, in a sense, that was like a black swan event, at least from our perspective, because none of us saw that coming. Um, and like I said initially, it seemed like a good thing, but then we found out why. But I still think it's a good thing for them long term. But we'll have to see. We'll have to see. But yeah, do I think it'll? It might. It might. But keep in mind, 45 is way up here. Um, I would. I don't think. I don't think they're going to get to 45 in this year. Um, maybe by the end of quarter one in 2025. Because keep in mind too, these rate hikes are coming. The rate cuts are still being filtered into the system. If we get another 50, I think was it December 10th or September 11th? I think it's September 10th. Or sorry, December 10th, I think it is. Then this could be really looking good as we start to get things filtering into the system here in July. Because keep in mind, by January, things will start to look pretty good. July. Oh boy, I'm thinking of the summer already. All right. When we look down here, you can see here they have a 245% debt to equity ratio. So basically, for every $1 that they have in assets, it means that they have $2.45 in I don't want to say liabilities, but in debt. So their debt is pretty big. So the servicing of this debt is really big as well. And of course, as these rates filter in, that's going to free up money. Now, what they do with that money is what they probably should have done with the whole Maple Leaf thing, but they need to start paying that down. So pay that down. Maybe they won't cut their dividend, but I mean, right now, I need some coffee. Right now, we're at 0.998, so it's almost $1. They've already announced that they're not going to raise it, and you can sort of see, yeah, there we go. So the next one will be 0.998 as well. They could cut, and it's fine. I mean, I would say don't cut drastically to try to avoid having, because that's one thing that would push them down. So I said that I think they're towards the bottom. Let me go back there. And here we're on the 5-day, but I think we're, maybe that's the bottom right there. That could be. But if they were to do a big dividend cut, let's say they cut their dividend in half. I don't think that would happen, but let's say they did. That will create selling pressure. That would push them down. That could take them down to like 35, maybe a little bit lower. It might be lower and then come right back up, but I think they're in a good buying place, honestly. I know a lot of people are looking at it and like, they're never going to do good. But you know what? People said the same thing about Air Canada. And, look what they've done. I think this could be the bottom. This could be the bottom. If they don't cut the dividend, this may very, very well be the bottom right there. If it's not, I think we're still close to the bottom. So we'll leave it at that. See, Ian says, I think simply Wall Street is confused. No way 162 is fair market. And I don't think it's that they're confused. I think it's the math. The math is skewed, and they're simply running. Like, I don't think they don't manually do that calculation, right? They have it set up. They have algorithms. They have software that does it for them. So it just uses the math that's there. Now, if somebody was actually doing it manually, they would look at it, and they would look at the math, and they'd say, oh, yeah, this is skewed. This is probably not right. But because software is doing it, software doesn't care about that. Software just does what it's programmed to do. Maybe as AI gets better, AI might be able to look at it and say, yeah, that's skewed, and maybe they could even adjust for that skew. That would be what I would say. Like if I was doing a deep dive on this and I was looking at this fair value and I was like, I would say take it with a huge grain of salt because it's not good. It's not good at all. All right. What do you think of ALV.V and their latest news? Well, I haven't heard their latest news, but let's pull them up. ALV. Here we go. Alvo Petro Energy. I'm just going to pull up their 3-year. They've certainly they have certainly come back down after this nice little peak. They've got a pretty good dividend, though. Look at this, 10.195%. So that's fantastic. But what is their latest news? Let's see here. They have little news down here. Annual long-term incentive grants. That's interesting. I don't know what that is. Let's see here. All right, let's see. They're announcing the annual rolling grants of long-term incentive compensation to officers, directors, and employees under their plan. A total of stock options, restricted share units. All right, interesting. I don't know if that's the news that you were talking about, but I don't see it as being, other than building a lot of incentive for people within the company. That's cool. That's cool. I don't know if that's going to impact things too much. Like, I've always thought with Alvo Petro, I think their dividend's too high. You know, I love a good dividend, but if you can't sustain it, then you might need to bring it down a little bit. So I think they should lower that dividend, work on developing the company a bit more. Because let's see here. I think they're still profitable, though. Yeah, they still are profitable. So I just would like to see them flying a little bit. I had them at one point in their challenge, but I kind of saw that they were probably gonna sink. So I did get out of them, but I still like them. I just think their dividend is too high for where they're at in their company. All right. So let me see here. Wait, because you want to add to your shares. Yeah, I mean, do your due diligence, Alberta. But as I said, like, you know, if it's still in this area, when I get the more money for the challenge, because I've got a budget for it, then I'll definitely add at least another share. All right. Oops, I think we're already there. Alberta says, I really like the dividends. Yeah, right now it's at 10%. So that's why I'm hoping they don't cut. That would be very, very cool. Let's see. Haha, lovely off-guard reply. Awesome. I can't remember which reply it was. Have I been to Japan? No. It's funny. Japan is a country I'd love to go to. And I think it's just because, I don't know, I like a lot. There's a lot of Japanese anime that I've liked in the past. And I think the culture of Japan is really cool. But yeah, I'd love to visit. I would love to visit Japan. And as I was mentioning to JJ the other day, I love Japanese food. So I would definitely love to go. Ian says, got an email from Simply Wall Street announcing the dividend, and that's where I got the information from. Yes. Funny thing is, because I use Simply Wall Street to pull a lot of my data, I get a lot of emails from them announcing stuff for things that I've done, deep dives on. Let's see here. All right. Terry says, Synovus and St. John, New Brunswick has me intrigued. What you say? Yeah, I mean, I know exactly. I actually know. I think I know somebody who lives in St. John. So yeah, no, I would actually love to visit St. John. I mean, I think the Maritimes. I think it's just a level of charm right across all of the Maritimes. And I have memories like sometimes even a city, like even a little town. Like for example, the best lobster dinner I've ever had in my life was at a small restaurant on Prince Edward Island at a town called, I think it was called Montague. And it was just fantastic. And because I still remember it. So, definitely. Paul says, I don't know what was worse, the Tyson fight fixed or the Netflix stream. Someone at Netflix should be fired. Yeah. I heard rumors that a script or something for the fight actually surfaced, but, it's kind of interesting. Now, I've heard a lot of different things. Like, I heard that basically, that Jake was pretty much going light on Tyson because he didn't want to be the guy who knocked out an old guy. So, I don't know. I don't know. There's a lot of rumors that float around about it. I honestly, I don't follow boxing that much. So, but I mean, I still will follow the rumors just because it'd be fun to see where they end up and see if there's any truth to them. Let's see. Alberto says, like to ask what you think about RBC robo investing and how it works. No idea. I've actually never used RBC's brokerage in any way, shape, or form. However, I will say this. Oh, excuse me. I guarantee their robo investing platform is going to be very concentrated on RBC mutual funds as well as ETFs. So it may limit what you can do because, there's a lot of things that you would miss out. Like if you were going to go with a robo investing platform, I probably would go with something like a Wealthsimple or maybe a Questrade. I mean, just somebody who's not, who's not going to limit you or try to limit you to, their own funds, just to sort of. That's what I would do. Now, I mean, it's completely up to you. But the other thing too is, if you want to do it yourself, you can invest in a slew of ETFs that are going to perform really well for you over the long term. Things like VFV, VDY, XEQT. These are all really good ETFs that they're gonna bring in a nice steady return. Probably would beat what the robo investing is gonna do, but I mean, it's completely up to you for sure when it comes to how you want to manage your money. I always say, learn as much as you can. That way, when you do make a decision, you're going to have the most possible information that's going to help you make the right decision. That's kind of the big thing, and that's what my goal is. My goal is to provide information, and hopefully, I don't want to tell you which one to go with, but I want to give you the information so that you have the tools to decide what's going to be the best for your investing. All right, Paul says, I'm definitely buying Pfizer on Monday. Yeah, well, we'll see if it goes any lower, though. See if it goes any lower. Isaac says, I've been bruised bad by BCE. You're only bruised bad if you sell at this point. Because you're in a situation where no matter, unless you bought BCE back before 2011, you're in the red. You're pretty much in the red. Now that is unrealized losses. If you sell it, it does become realized losses. And some people will. Some people will be like, I'm just very uncomfortable. I don't think BCE is ever going to recover. I don't agree with them, but it's okay to have that opinion. And what I normally say is, if you're in that point and it's causing you that distress, and you have a sideways move that you can make, that may not be a bad option for you. It just boils down to, like, for example, I have no problem making sideways moves. I have no problem selling in the red. I will do it because I look at it this way. If I have a loss sitting in the red, and I'm like, okay, it's probably going to take a while to get back into the green, but here's a sector right now that is absolutely setting itself up to explode. Maybe I might take that loss, move it to something that I know is going to make the money back a lot faster. But sure, maybe you're watching that the new thing you moved in, you're watching it go up and you're thinking, I'm still in the red, but eventually you're in the green. And then, even if you only get to the green and you end up selling whatever it is you wrote up, at least you've broken even and you can look down and you can see BCE. Maybe it's moving back up and you can sort of say, well, look at you, Slowpoke. I'm already there. I'm ready to move on. So that's not a bad thing. You really have to sort of look at your strategy. You have to look at your comfort. Have a plan. That's always the best thing, is to have a plan. Sort of say, okay, well, look, this is what I'm going to do. Or if it's a situation where you're going to ride it out, like if you're very bullish on BCE long term, that's when you might actually stack more and pull down that adjusted cost base. You get out of the hole a little bit faster. But if you get that uncertain feeling, and this is the thing I will say, if your emotions are going to get the best of you, like if holding something like that you're so worried about is going to affect like your sleep or your life, it's not worth holding it. Then look for that sideways movement and get out. Your health is more important than your money. Believe it or not, it's true. I know we're in a community where people might be thinking, what? No, money. No, trust me, your health is more important than your money. Ian says, I was going to sell EXE in my non-registered and put the money into my TFSA. Was going to buy an ETF or a REIT. Might wait and use dividends from the non-registered to fund my TFSA. Okay, fair enough. Bismarcky says, I think Wealth Simple uses a lot of Mackenzie funds. Oh, those Mackenzie funds, yeah. It's kind of funny. Like I every so often Mackenzie things do come up when I'm doing some of my screening. But a lot of times I look at them and some of them are a little hokey. Not to say that they all are, but there's a few of them out there that I think are hokey, or not that they're hokey, that there's just not a consistency that I feel like I can bet on. That's kind of what I would say about that. Did you look? I haven't yet. I was waiting for you to ask me. All right, let's pull up ASC. All right, Ardmore Shipping Corporation. There we go. All right. I'm going to pull up the 3-year first just to sort of see. All right, they have been building up. Okay, so they got a little bit of a drop here. They were up at 22 at one point, but they have definitely dropped. All right, that's fine. Let's take a look here. Let's see. That's a pretty good dividend, 6.117%. Let's see, quarterly. They are profitable. I like that part. All right, let's go in here to some of their back end. All right, let's come down here. It's not giving me any of this information. We got to go to Yahoo. All right, so it's ASC, Yahoo. Come on. There we go. And sometimes TMX has issues with U.S. stocks. Sometimes it doesn't give me all of the stats. But let's go in here and see what do we got here. All right, let's pull it up here. All right, so here we go. Total debt to equity, 4.52%. All right, so they've got very little debt. I like that part, Michael. I like that part a lot. Let me see here. Oh, look at this. They've got a very solid return on equity, 25.13, and also the return on assets looking good, 13.01. So I'm liking some of the back end. I am liking some of the back end here. Kind of curious here. Oh, this is not bad either. Their payout ratio is a little bit lower than I was anticipating, 29.86%. So their dividend is pretty sustainable. I have no doubt about that. They have moved down a little bit, but and let's try one more thing here. I need to know what they do. I do need to know what they do. All right, so they have a fleet of mid-sized products and chemical tankers, petroleum. Okay. All right, so here, this is exactly what's going on here. So as, excuse me. So right now they're on that downward trend. Let me just pull up. I'm going to pull up the last 6 months. Yeah, and we can see this. Now, what has also been happening in the last 6 months, other than we've had a couple of bumps up in the price of oil, but oil has been on a downward slide. So when these guys transport a lot of things like petroleum, oil, things like that, that's going to impact them as well, and that's going to pull them down. However, this is the good news, Michael. I think this is just temporary. As oil begins to rebound, so will this company. So if you're looking at them for a longer term play, it's right now. These are great times to be DCAing into this one as it continues to go down, because I think it will come back up. So right now you're looking at 1177. When we look back up here, you can sort of see. I mean, it made it up to here. Now maybe it won't make it quite that high, but I think it's definitely reasonable that it can get back up anywhere from 17 to 18 as oil begins to rebound. So, there is a play on this one. There's definitely a play. All right. Let's see here. Michael says, any thoughts on AI.to, which is similar to Timber Creek? Is that Atrium? Is that what it is? Oh, excuse me. AI. Yeah, Atrium Mortgage Investment. There we go. Let's pull them up. And yeah, once again, it's similar. It's they haven't. You'll notice that Timber Creek Financial really mirrored. Oh, I need to have a drink here. I got that little cold thing starting to build its way in. It's saying, Candace, you've talked too long. But that's fine. Yeah, Timber Creek Financial very closely mirrored REITs. And this one's not as much. Oh, wait a minute. We're at the 1 year. Let's go to the 6 months. But yeah, you can see we still had some of it. It's just not quite as smooth, but it's still going to do well. I think it will still do well when we continue to get deeper into the rate cut season. So I have no problems with this one. I do like, I do like Timber Creek Financial a little bit better. And I think Timber Creek Financial is a little higher on the dividend yield too. But this one here is 7.993, so it's still not too shabby. Not too shabby at all. Let's see. You stepped away for a minute. Uh-oh. I did not pull up. Sorry. There we go. This one. I did not pull up PFE, but let's do it. I said I would. All right. Here we go. Pfizer. Yeah, and look at this. Of course, these were from these earnings. And, there is a lot of change going on within health in the United States, as you know, and that is certainly impacting them a little bit as well. I'll pull up the whole year. And you can see they pretty much are off a cliff from here. Let's actually, I'm going to pull up the 5-year. Let's pull up the 10-year. Yeah, we have to go to the 15. They're sort of in that similar situation. So let's see here. So yeah, the last time they were this low was 2012. So 2012. So yeah, I have no qualms. I think they are going to rebound. It is Pfizer. It's not all about vaccines. They do a lot of medical research. There is a lot of drugs that they have developed, like big game changer drugs. They're going to be fine. They're going to be fine. Right now, this is the type of thing where, I'm not saying go buy, go crazy. They're at $24. No, but I mean, it probably isn't a bad thing to be DCAing if you've got confidence in here. I mean, do your own due diligence as usual, but I do feel that they are going to, they're going to rebound. They're not going to go straight up to 59. That could be a bit more of an aberration, but if you look at where they were roughly going, I think it's reasonable that they could get back up to, they could even get back up to $44, $45. Eventually, it's not going to happen fast. And there's still a lot of uncertainty. So right now, and this is why I said DCAing is kind of good, because we don't know how much longer they're going to go down with some of the uncertainty that's going on. It could be a little while. So there may be an opportunity of DCAing to get a really good initial price for these as it does start to rebound. And maybe it doesn't start to rebound until the summer. I'm not saying that that's the case, but it could be. It could be. I don't think we're going to see... We might see it flatten out in December, but I imagine in January it'll probably go down again as you get the whole inauguration and everything. But we'll have to see. We'll have to see from there. I don't think it can go down much further, though. I think, it might... Maybe it can go down to 20. Maybe it might wick a little bit below that, but I can't see it going that much lower than that. All right. All right, let's see here. I know Zim in the same sector like ASC, which sold off also, but already rebounded over the past few months. Yeah, I mean, just keep in mind, just because, you can both be in the same sector, but sometimes, depending on some individual differences in the company, somebody may rebound a little bit faster depending on what they're carrying, depending on what deals they already have in place. But yeah, and keep in mind, I still think ASC will be fine. But definitely good for Zim. Yeah, and this is exactly what I was sort of talking about. Some of the other stuff they have, like a lot of them are like cancer drugs. Absolutely, these are fantastic. Like I'm still bullish long term on Pfizer. Like I've got no worries. Like they're not going to go out of business. They're not. Let's see. A fund invests $1 billion into Pfizer when it's in the 30s, and another fund bought $1 million. Yeah, exactly. That's because there's, that's the smart money. When you look at what the smart money is doing, you have to sort of say, okay, let's see why they're doing it. You still want to know why, but, I think Pfizer's a fine. I think they're going to be okay. I think they'll absolutely be, exactly. This is what Patricia says. I think Pfizer will be fine. Patricia's right, 100%. All right, guys, we're getting close to the end. If you got your final questions, let's get them into the chat. While you guys do that, I'm going to have some more coffee. Keep the throat lubricated as, I'm stressing it a little bit tonight, but that's okay. That is absolutely okay. Now, while you guys are doing that, I'm going to quickly bring up what's coming up on the channel. So let's head over here to the Discord. Oh, hello, Discord. Oh, there we go. All right. So, let's get rid of the scammer. There we go. All right. So coming up on Tuesday, we, of course, are doing another one of those easy mode videos, but this time we're looking at some income ETFs. So income ETFs coming up on Tuesday. We do have that deep dive vote right now. So those of you who have not, and I'll show you how. I'm going to show you how right now. Let's come over here. If you've never been to the community tab or don't know what the community tab is, you go to YouTube, and I'm just going to go view your channel. All right, so on the channel, you got these tabs right here. This one here, community. You click on community, you come in, and here are the votes right now. So right in here, it'll give you a chance. You just choose the one you want. We got 98 votes, guys. We should easily have 150 votes. So right now, you can see you guys won't actually see who's winning when you come in if you haven't voted. But XEQ is right now leading 41% of the vote. Brookfield Corporation, I want to do them so badly. They're only at 26%. So if there's a lot of Brookfield Corporation fans who haven't voted yet, maybe we can get them up. But otherwise, we're probably going to be doing XEQT. Usually when a company has this big of a lead this early, they usually win. So what can I say? All right. Anyway, that's where the community tab is. It's a fantastic place to be. So all of that fun stuff. All right. Now, let's see here. All right. Let's see. Pfizer and the rest of drug and food sector sold off Thursday and Friday. Yeah. I mean, it's effects. It's politics. What can you say? HLF. Well, let's take a look at HLF. What is HLF? I swear, Michael, you come with a list. You have like a list of these stocks. It's like, okay, let's get through as many of these as we can. All right, HLF, Highliner. Okay, I do like Highliner. Now this here, of course, oh, wait a minute. I'm in Highliner. All right. I went to Canada, sorry. You're looking at Herbalife. I'm still excited. Highliner. I love Hyperliner. All right, and we've looked at this before. We have. Oh boy, look at this. They're still going down. Yeah, they certainly. I mean, they have this little bit, but and I'm just trying to remember exactly what they made. I know it has to do with nutrition. Let's see. Whoop. So 5. Let's see. Weight management, targeted nutrition, energy, sport and fitness, outdoor nutrition, literature, promotional, and other stuff. Yeah. Here's something to be concerned about too, guys. So things like Ozempic. There's been a lot of stuff in the news lately that people stopping it are gaining back the weight they lost and more. So that could hurt. That could hurt the brand. If this comes out more and more. And it's kind of that situation that if you decide to go on Ozempic, you almost have to stay on it for the rest of your life. So that's something to keep in mind. But there has been a little bit of negative stuff in the news lately about it. I don't know if it's going to affect companies like Eli Lilly, but excuse me, it could definitely be something to look at for sure. But yeah, in this case here, this company, yeah, it's they've been falling for a while. So this concerns me. Like, you've had a couple little ones. A couple little bounces, but for the most part, the overall trend, like even the highs, high, lower high, lower high, lower high, lower high. Well, lower high. This here was a lower high. This is a higher high technically to that one, but for the most part, it has been trending down. So this would be a company I'd be a little bit cautious with, just a little bit. Now they are still profitable though, so they're not in the negative or anything like that. But will they recover? Maybe. Is it going to happen fast? Probably not. Probably not. I think if they do recover, it might be a slow climb. Unless something big happens for them. But I'm not super optimistic on HLF for sure. All right. Mary says, be well. Yeah, absolutely. Let's see. Vineet says, wow, still on the stream. I have come back and gone again. Ah, Vineet. Well, you've got the replay. I want to make sure you have a little bit of content there for your replay, Vineet. Patricia says, I'm bullish on Pfizer too in my RRSP. All right. King a day. You let me down. XEQT. No, you didn't. No worries. All right. Yes, we're not going to look at any of the food. We're not going to look at the food. Not tonight, Michael. My throat is dying. So we're gonna start wrapping this up here. Just because, I want to be able to talk tomorrow. And right now is like I'm in doubt. I might not be talking tomorrow. I might be too hoarse. HLF better than getting shots to lose weight, and HLF products more healthy. Yeah, absolutely. Like, I don't advocate, even my doctor, I'm trying to lose some weight. My doctor is like, oh, you want to go on Enzemic? I'm like, no, no, I don't. There's a lot of ways to lose weight, and but I don't want to ever get into a situation where you have to rely on a drug. Like, if you stop the drug, you're going to explode. You're going to become very, very big, very, very fast. Yeah, that's not healthy. That is not healthy either. So, yeah, I absolutely think that's a bad idea. All right, let's get ourselves back up to the main. Whoops. That's the this week. I gotta remember. There we go. We'll come into this one here. So once again, guys, as you can see, the office is looking different. So fantastic. It's great. I don't have to. When I was filming the videos, I was bringing up that divider to cover over the bookcase. Now I don't have to do that. That's fantastic. All right, guys. This has been another fantastic Sunday. You guys rock. I love spending my Sundays with you guys. We'll be back here, of course, on Wednesday. We'll do the market close. And, of course, on Wednesday, I'll give you guys an opportunity. If you guys want to close on Friday, we can probably do that as well. But we will, of course, be back here for this week. Again, next week. I think next week is the last one in November. And then the following week, because December 1st, we'll have free memberships. And the financial Vlogmas will begin that day as well. So there'll be a bonus little stream somewheres on Sunday. I don't know what time yet, but that's all coming. I can't wait. This is going to be fantastic. We're going to end it on an awesome comment. King a day. Nice stream as always. Thank you and have a good weekend. You as well, my friend, and everyone else. Enjoy the rest of your week, and let's hope we get a nice week on the market. Until then, everyone, take care and have a fantastic night. Bye-bye.